Let's talk about real estate investing in a higher interest rate environment. A lot of investors are trying to make deals in today's market, but they're using the tired old strategies that probably worked better 2 or 3 years ago. Here's a few tips on how you can adjust your game plan. Tip number one, this seems obvious, but a lot of people are ignoring the simple fact it's more expensive to borrow today than it was a few years ago. So you might need to put some more cash into some of your deals to make them work. Now remember, almost any property can cash flow with enough down payment, but does that make sense to put a whole bunch of money down into any property? No, because that could lower your leverage and lower your returns. But some deals that say maybe worked at 15% down payment, you might need maybe 20 or 25 to make that same deal work today. So keep it in mind. Now, if you don't like that idea, what you could do is focus more on value add properties. These are properties where you can improve the value through renovation. Now, remember, you got to get the appraised and the market value both up at the same time. But I love this strategy because it's virtually the same as increasing your down payment. You're building that all important equity in the property to reduce the net you need to borrow at the end of the day. Now, last but not least, when it comes to markets and areas here in Greenville, I would personally stick more to the A/B class properties where tried and true demand is there versus trying to pick an area where you might be the first investor or you think it's going to blow up in the future. High rates tend to cool appreciation, so stick to the places with high demand. For more tips, hit the follow button.